watching Chairman's Briefing, and I'm Rachel Lee. This episode is brought to you by Insight Capital Partners. Let's get started. The gold market has not responded well to what many analysts were expecting to be a hawkish rate cut. The Federal Reserve cut rates by 25 basis points and have suggested a slower path in its easing cycle through 2025. The updated projections show that the central bank remains optimistic about the health of the economy, even as inflation remains stubbornly elevated. The central bank expects core inflation to rise to 2.5% in 2025, up from the previous estimate of 2.2%. Consumer prices are not expected to hit the Fed's 2% target until 2027, which is unchanged from the previous estimate. While the short term appears lower for the monetary metal, the medium to longer term price action for gold looks completely different. Many analysts point to protectionist attitudes and the threat of an escalation in trade tensions as supportive factors. BMO Capital Markets sees precious metals standing out in a challenging commodity landscape for 2025. The Canadian bank upgraded its outlook for gold and silver while downgrading several other metals. Their analysis points to growing deglobalization pressures as a key factor shaping markets. The bank projects gold prices will reach new heights. Average prices could touch $2,750 per ounce, while the summer months look particularly promising, with third quarter projections reaching $2,850. BMO analysts highlight increasing trade tensions and the push for de-dollarization as primary drivers for gold's anticipated surge. Silver also received an optimistic revision. The bank raised its forecast to $29 per ounce, signaling that the long-term outlook remains strong. BMO points to increasing industrial demand from green energy projects and global electrification efforts as key support factors. A Tier 1 gold mine sits at the heart of an escalating crisis in West Africa. Mali's military regime has issued an arrest warrant for Barrick Gold CEO Mark Bristow, transforming a business dispute into an international showdown. The stakes could hardly be higher for both sides. The story of the Loulo-Gounkoto mine reflects the delicate balance between foreign investment and national interests. Last year alone, this modern-day El Dorado produced 700,000 ounces of gold and poured over $1 billion into Mali's economy. 8,000 local workers call it home, representing 97% of the workforce. But Mali's military government wants more. They've imprisoned Barrick executives, blocked gold shipments, and demanded a larger share of profits. Barrick has issued a warning that operations might halt entirely. Yet, despite the mounting pressure and conditions that are quickly deteriorating, Bristow publicly maintains hope for dialogue. Agnico Eagle announced plans to acquire OIII Mining in an all-cash transaction valued at $204 million. The offer represents a 57% premium over OIII Mining's recent trading price. Now, the deal centers on OIII's Marban Alliance property near Val-d'Or in Quebec's Abitibi Greenstone Belt. This strategic asset sits adjacent to Agnico Eagle's Canadian Malartic complex. Current estimates show 1.7 million ounces of gold in indicated resources, creating 1.03 grams per ton at the Marban deposit. Agnico Eagle plans to integrate Marban with its Canadian Malartic complex, but for now, the transaction awaits standard regulatory approvals. A private Peruvian miner called Alpayana has launched a direct appeal to Sierra Metals shareholders, bypassing Sierra's board. The unsolicited offer values the Canadian miner at 85 cents per share and represents a 10% premium to Sierra's recent closing price. Alpayana points to Sierra's troubled financial history. The company criticizes management for accumulating $153 million in losses since 2013. They also highlight Sierra's substantial debt burden of $120 million. Tensions escalated after Sierra announced plans for a 1-for-20 share consolidation, while Alpayana claims that this move threatens shareholder value. Sierra has defended the decision as a necessary move to attract new investors. While high-frequency trading has modernized capital markets, it has often left junior miners behind. These mathematical trading approaches can disconnect stock prices from their underlying value. Enter ICP Premium, a market-making service launched by Insight Capital Partners. It's a solution that targets junior mining companies that are struggling with stock market liquidity by combining traditional market making with advanced trading algorithms to help smaller resource companies attract institutional investors. Early results show that clients using ICP Premium report improved liquidity and market capitalization, with stock prices showing resilience even in challenging conditions. Lightning strikes twice at Quebec's legendary O'Brien mine. Just days after announcing a discovery of 1,345 grams per ton gold, Radisson Mining has delivered another remarkable result. Their deepest hole ever has struck high-grade gold, 1,500 meters below the historic mine workings. The latest discovery returned 242 grams per ton gold over 1 meter, nested within a broader zone averaging 31 grams per ton across 8 meters. This marks the first time that drilling has probed directly beneath this historic mine, once crowned as Quebec's highest-grade gold producer. These back-to-back discoveries strengthen Radisson's mission to outline 3 million high-grade ounces at O'Brien, and of course, they're catching market attention. As merger activity intensifies in Quebec's mining sector, Radisson increasingly appears on potential takeover target lists. The team that sold Colombia's Buriticá mine for $2 billion has struck gold again. Collective Mining announced exceptional drill results from its Guayabeles project. The latest hole produced what the company calls its best intercept to date. The numbers tell a compelling story. The drill hole cut through 534 meters of mineralization, grading 2.7 grams per ton gold equivalent. Within this broad zone lies an impressive 150-meter section, grading 6.16 grams per ton. This result represents the highest grade accumulation ever encountered at their Apollo target. The success here appears far from isolated. 2 recently completed holes show similar characteristics, with assay results pending. Collective Mining plans to build on this momentum. The company has announced its most ambitious program yet, with 60,000 meters of drilling planned for 2025. Volkswagen announced a $69 million investment in lithium explorer Patriot Battery Metals. The deal gives Europe's largest automaker a 9.9% stake in the company at a 65% premium to recent trading prices. The partnership centers on Patriot's flagship Quebec property. This asset ranks as the largest lithium pegmatite resource in the Americas. Current estimates show over 80 million tons of indicated resources. The deal includes a binding agreement for Volkswagen to purchase 100,000 tons of lithium concentrate annually over 10 years. This material is expected to feed Volkswagen's ambitious battery production plans. The German automaker plans to use the lithium at its facilities across Europe and North America. This includes their upcoming battery plant in St. Thomas, Canada. The market embraced the announcement, with Patriot's stock price surging 36% following the news. A major shift in U.S. electric vehicle policy is on its way. Documents reviewed by Reuters reveal that President-elect Donald Trump's transition team recommends ending federal support for EVs while strengthening barriers against Chinese imports. The proposed changes would redirect funds from charging infrastructure toward national defense priorities. This includes securing domestic battery supply chains independent from China. The plan also calls for eliminating the current $7,500 tax credit for electric vehicle purchases. Now, the transition team suggests imposing global tariffs on battery materials to boost American production. They also recommend rolling back emission standards to 2019 levels. Now, this would allow vehicles to emit approximately 25% more emissions per mile than current regulations permit. These changes could significantly impact automakers like General Motors and Hyundai, who are expanding their electric vehicle lineups in the U.S. market. The policy shift might also affect Tesla, despite CEO Elon Musk's support for the incoming administration. A new and unraveling chapter in U.S.-Canada trade relations puts uranium at center stage. As incoming President Trump threatens broad tariffs on Canadian goods, Ottawa is examining its nuclear leverage. Yet this strategy faces fierce opposition from within Canada's own borders. American nuclear power plants depend heavily on Canadian uranium, with Saskatchewan's rich deposits providing a quarter of America's nuclear fuel needs. Premier Scott Moe of Saskatchewan, where most uranium is mined, strongly opposes any export controls. He calls the federal government's consideration of such measures a, quote, complete betrayal of Canadians. The Western provinces are crucial to Canada's resource strength, and they seem to be united against Ottawa's strategy. Alberta Premier Danielle Smith dismisses the idea outright, arguing that it would only increase costs for everyone. Despite this opposition, the Trudeau government maintains export controls as a potential response to Trump's threatened 25% on tariffs. Meanwhile, America's nuclear utilities watch nervously as Canadian politics and trade tensions collide. Skeena Resources has secured a crucial permitting and funding milestone. The British Columbia government approved the company's 10,000-ton bulk sample permit at SK Creek. This approval triggers the release of $195 million from Orion Resource Partners as part of their gold stream agreement. Now, the funding represents the final portion of a $200 million streaming deal, which was signed last June. This capital injection forms part of Orion's larger $1 billion funding package for the project. Skeena plans to restart this historic SK Creek mine as an open-pit operation by 2027. The project targets annual production of 320,000 gold equivalent ounces over 12 years. The company continues to advance through environmental assessment with its First Nations partners. And overall, markets responded positively to Skeena's latest news. Their shares gained 3.5%, valuing the company at $1.4 billion. And that's all for this briefing. Make sure to hit subscribe and leave us a thought or two to support the channel. Thanks for being a part of the show. We'll see you next week.